You're watching Mirror 7 News. Stay informed, stay ahead for more news.
Hey everyone, let's talk about the latest earnings report from the Royal Bank of Canada, or RBC. The bank just announced its third quarter results, and the numbers are looking really strong. RBC's net income for the 3 months from May through July came in at $5.4 billion, which is a solid 21% increase compared to the same period last year. That's a pretty impressive jump, and it shows that the bank's operations are really firing on multiple cylinders right now. One of the key reasons for this boost in profit is that RBC set aside less money for potential loan losses than analysts had been expecting. In other words, the provisions for credit losses, which is the money banks reserve to cover loans that might not be repaid, were $881 million this quarter. That's up 34% from last year, but it's still well below the roughly $1 billion that some analysts had predicted. For context, in the previous quarter, RBC had set aside $1.42 billion, largely because of concerns about trade tensions and tariffs at the time, so this lower reserve has freed up more capital to contribute to profits. RBC's commercial banking division benefited the most from this. Profit in that area rose a striking 40% compared to the previous 3 months. This surge is being attributed to both the reduced loan loss provisions and solid underlying growth in lending and client activity. It's clear that RBC's commercial banking operations are being run efficiently and are responding well to market conditions. Capital markets also delivered strong results. The division posted over $1.3 billion in profit, which is a 13% increase year over year. This growth was mainly driven by higher revenue in global markets, as well as corporate and investment banking. Essentially, RBC's activities in trading, advisory, and investment banking are performing very well, adding another layer to their strong quarterly performance. The bank's adjusted earnings per share came in at $3.84, which beat analyst expectations of $3.29 per share. So overall, this quarter shows that RBC's strategy of balancing risk while capitalizing on commercial and investment opportunities is paying off. The combination of smart risk management and growth in key business areas has made this a standout quarter for Canada's largest lender. All in all, RBC's third quarter results highlight strong financial health, and the bank appears well positioned to maintain momentum heading into the rest of the year. Stay subscribed for more videos.